love positive energy.
And then I was like, song keep playing until Dad gets in the car. And then he could
Yep. Yep. Win with the team. Hey. Oh, too fun. Win with the. Hey. Yeah. Hey. Fuck you. Fuck you, man. IG. All right, you guys. We're about to go ahead and get active. I got the babies in here trading with me again. I just posted their wins on my story. Y'all go check out my story and see how much my kids made in the market. My 6-year-old and my 7-year-old just following along with these trades with me. I want y'all to see it for yourself. But let's go ahead and dive right in. Yeah. Fuck you, me. Look, I just say that because that's all they know. We know you timeless, baby. Hey. All right, so we got a lot of winning trades this morning. Big wins for the team, okay? Win. Yeah. Big wins for the team. All of our trade setups were called in our live free session. I executed all of these trade setups in our live charting session. So for everyone that wants to get into trading, you can hop on with me. I'm going to show you application, man. We're going to show you application. Okay. At least 50,000. That was an ad. That's not what I'm telling you. You need to trade. He is not working for us. It's okay. All right, so we took a Euro CAD sale. Beautiful turnout. We're headed towards TP2 as of right now. We also took a gold sale. My daughter is still holding her gold sale from this entry up here. Oh, man. So on her account, how much were you up, Serenity? That's $1,800. $1,843. 7-year-old daughter's up almost $2,000 from just plug and play. I called a trade. She put them in.
And I put in the stop loss, but it doesn't show the.
Yep, put in the stop losses. All right, we also got this oil trade. So we charted oil, I believe it was Sunday. We noticed that price was stuck in consolidation right here at this area. Now, originally, we were looking for a sell, okay? Now, the way I set up my trades, I only trade from structural levels, meaning I wait until I identify a strong structural level of support to take a buy, or I'll find a strong structural level of resistance to take a sell. Now, when you take your time to identify those levels before jumping into trade setups, not only will you maximize your risk reward on your trade setup, but you put yourself in a position to take advantage of a trade if it goes against you and you're in a good spot. So what I mean by that is we had our sale here originally, right here at this zone, stop loss right above the high. So the plan was to take this sale, and if the trade went against us, we will wait until we got a pullback and a retest. Now let's show you what happened on the 15-minute. So on the 15-minute chart, our stop loss was hit. And as soon as that stop loss was hit, it pulled back to retest that entry and we entered the buy. So that way, you don't have to pretty much fall into that trend, that really dangerous trend of chasing the market. Let the losing trade go. Put up the exact same amount as far as your risk to get into that trade going in the opposite direction. And then we got a big win on gold, okay? And we're actually waiting on another trade to activate. So just from being in a state of flow, we got a lot of pips on this thing. A lot of pips. All right. So this is the trade my son is in right now. And he is up. How much you up, Zeke? A little under $1,000?
To get started in data analytics, you don't need previous experience.
No, 4,000 is your total. But how much you up on this gold, on this oil trade just by itself? So we will have $4,000 days, but you don't have one today. Let me see. Come on, come over here. Right here. How much is that? Right there.
It turned to 9,000.
Don't forget the decimal, buddy. What is that?
What's a decimal?
The point. How much is it, Zeke?
902
There you go. $902 from this setup. Beautiful setup. Let's see. Let's monitor these positions. So we got a couple trades running. We also got a US 30 sale going on. And this thing is dropping pretty quick. So we looked at this area here and took a sale on US 30. Now what we want to see is what's going to happen right here at this structural level. In these next 15 minutes, this next 15-minute candle, we got 6 minutes and 37 seconds left in it. But in this candle, let's say we get a close beneath this low here. This will be really nice for our position, letting us know that we can actually hold this trade set up a little longer. Hold on one second. And that's what we want to do. We want to try to let the trade setups run. And I'm going to show you guys why. When I first started trading, okay, really anxiety used to whoop my ass, just to keep it short and straight to the point. That's because price moves in different directions, okay? So when it's going up, it doesn't just go straight up. This is what you're going to see. And when you first start trading, this is uncomfortable because most people, when they get into trading, the goal originally is not to master the skill set. The goal is to make money. So when you see this, oh, I made some money, and you get a 50 or 60% retracement, people freak out and they close their trade right before the market continues in that direction that they're in and creates higher highs. Same thing on the opposite side. You won't see it going straight down. It's going to move like this. So in understanding that, I saw if I wanted to make the most out of my trade setups, I needed to be more patient and allow the market to do its thing. So looking at this US 30 trade, okay, when this thing fell here and pulled back, most people are out of this trade from that anxiety that I told you about. But once you understand the different phases of the market, this uptrend, this downtrend, and consolidation, you have a better understanding of how to manage your positions. So let's say price is moving down and then price starts to consolidate. Don't freak out. Trap price, okay? So you can either use an arrow like I do, or you can use rectangles. And this is going to give you a visual representation of price being trapped in range. And as far as your next step, move your stop loss above this area of range. Okay? So if price pulls back and hits that area, you didn't lose any money. You still made money. But it also teaches you, like I said, that magic trick, which is patience. Because when you don't get flustered and understand that, hey, if I win $20 or $30 on the setup, that's still more than I started with. Versus, oh, I'm up $90. It's pulling back. Let me go ahead and close it. Then you can put yourself in a position where you're making $50, $80 a trade to where your account looks like my children's account. You're up $1,800 on a couple of trade setups just from holding the position and letting the market do its thing. That is exactly what happened here. All right, so this was our entry. It pulled back really close to our entry. We didn't close it. We let price do its thing. Notice that price started to consolidate. The stop loss is right here, okay? We took profit on one of those trade setups to make sure we get something out of the market. And then outside of that, get out of the way. Most people overtrade and attempt to overcompensate with management, and they cause themselves problems. And like I said, as soon as you close that trade, you get the move that you were looking for. All right, so we got this US 30 set up. It is looking beautiful. We were looking to find the entry on Euro USD, but we didn't quite get it. And we don't want to force it. This would have been a nice entry, but we missed it. And as of right now, the way price responded here, it definitely looks like Euro USD wants to continue moving up. If it does not give a change in trend at this level here. And so if we look here, for those that are familiar with candlesticks, that is a clear double top. For those that aren't, I'll put on the line chart. Anytime you see that pattern at a strong structural level, in most cases, price will do this. It will pull back, retest that right shoulder, and then drop. Now, again, that depends on how strong that structural level is, and it also depends on momentum. So at this point, this is our test on Euro USD. We want to see how legit this downtrend that started with this wick rejection is, okay? So price pulled back, retested about 50% of this engulfing candle, created this double top, and now we're getting that retest of the right shoulder. If this move creates a higher high, it's taking off. Now, as far as identifying your targets, don't be afraid. Just look to the left, all right? And the next area where you see a bunch of rejections, this is the area that you should be looking at to take profit, either at the highs or areas like this. And if you stick to those basic concepts, this is what I meant by maximizing your profit. And that's why we say we maximize our gains with minimum risk. So that's a 1 to 7 trade setup. If this thing breaks above the highs, you can actually put it here. That simple. That simple. Okay? The only thing that stopped me when I first started was, again, my mindset. So I personally pulled away from trading, got into meditation, and in doing so, a lot of material came to me. So I transcribed it and put it into a mindset series to help people reach the new heights that I reached as far as personal development. Because until you develop personally, anything that you want financially, monetarily, you won't be able to obtain it, because you'll be in a state of chasing instead of realizing that everything is already yours. So our mindset series, Structure Breaking, and our 6-week journal helped me align mentally so I could achieve those profits. All right. So here we are. Serenity, my daughter is in this cell. She's been holding this cell since here. Okay? This is a nice swing setup. Serenity, you've been in this trade for 1, 2, 3, 4, 5, 6, 7, 8. You've been in this trade for 9 days, baby. No, you don't need to close it because it's actually still going down. We hit TP1. I noticed that you didn't put your TPs in. You have to make sure you take your time and get your TPs in, baby, okay? So on one of those TPs on Euro AUD, close it, and we're going to let the other two run because you're really close to TP2.
Wait, what was the letters you said?
Euro AUD. Yes. Euro AUD. So we're going to see what happens once price reaches this level. Let's see what's going on down here. Looks like we got another double top right there. Yes, we do. It is really clear on the 1 hour. We want to see how price responds right here. There's a chance that sometime this week we can get a pullback towards our TP1. And if that happens, it's okay because while price is going down, it also makes retracements. So we use these retracements to add to our position to catch the continuation of that move. So we already got some alerts set on it. Let's just go. What are you doing, US 30? Okay, what time is it? We're gonna wait until 11:30 to see how this plays out. And if this thing does not close here, there's a great chance it's gonna break the high. So what we'll do when this 30-minute candle closes, if it does not break beneath this low, we're gonna move our stop loss deeper into profit at this level to make sure that we get more than just break even. You say you were in, what other trade were you in, Serenity? I saw NZD USD. Were you in a sell or a buy on NZD USD? Because this looks like a bull flag. So it could possibly still be moving up. Let's see. Pull up your trading panel. Yes, ma'am. Yeah. So this thing is really, it printed a really strong level of support right here. With all of these rejections. Now, what is this zone above that we made? Okay, that was our original sale. Okay, I see the trade that you're in. You're still in this sale. So look, what you're going to do is just move your stop loss and profit. And that's how we'll help you monitor that trade setup. Because right now, this is a valid area of resistance. And with the way prices playing around right here at the 382, it'll be best if you just protect the trade and we wait until we get a breakout. On the 4 hour, if it doesn't turn around right here, it's definitely going to create a higher high. So what we can do is just use our alerts. That way we can monitor the market without actually sitting and staring at the charts. See, we got some people on YouTube. What's up, YouTube? How are you guys doing? Now this one, USD CAD. We're headed towards TP2. Nice. Okay. We're going to add to this position depending on how this next candle plays out, okay? It was YouTube Zeke. So this area right here, I'll give you guys a gem. When you see the market creating relatively equal lows or vice versa, it's creating relatively equal highs, and you get a breakout of that area, in most cases, after you get that breakout, price will pull back and retest it. The exact same thing that I was telling you guys about that oil setup. So that's what we're about to use to create a new entry for a trade setup that we're already winning on and add to this position. So this is another thing that's helped me throughout the process of developing as a trader. Once you find the proper direction of a trade, you honestly don't need to hunt and search for too many trade setups just so you can try to be into everything. The thing that I've found that works the best is understanding when flags are created in the right areas to get in as far as the retest. And from there, like I said, I just add to a winning trade and continue to let them run. So in this one trade setup, we got 3 different entries. This is a 1 to 13 trade. So let's say you got $10 on that trade. You put yourself in a position to make $130 off of risking $10. Same thing here, 1 to 8. That $10 turns into $80. So if you guys bet your friends, you might as well bet the market, because you have the ability to control your odds with the setups that you find, which is why I like it. What happened with, okay, so we're also in pound JPY. This trade setup became a lesson for us. So this was our entry. We went in profit, and this thing came back and hit us. So we went in profit about 60 pips before price pulled back. We put those stop losses in profit, and the trade setup did not reject. It continued to trend in this upward channel. So as far as this setup, oh, look at that. Yeah, as far as this setup, we actually missed the re-entry to get into this buy. So we're going to leave it alone. Just going to set an alert here, and we'll see if price gives us some type of entry there. But this, I'm glad this happened. This is another thing that helped me, and that's not chasing your trades. If you missed it, it's okay. Live to fight another day. When you get into that revenge trading just because you lost a setup, you are going to lose. The market has more capital than you. You can't out trade the market. You got to learn how to lean heavy on your disciplines and just let the market come to you. Let's see where we are on the 4 hour. Yeah. Okay, on the 4 hour, this thing looks like it could definitely break above these highs to create a higher high. Now, when you're trading and looking at the higher time frames, like the 2 hour to 4 hour, and you see things like this, the next step is to go to higher time frames, because now we need to see different areas of structure, different areas of resistance. So when you go to those higher time frames, we're going to look at the past. You want to know what's going to happen in the future? Look at the patterns of the past. That's with the market. That's with your friends, your spouse. That's why I say the market is life, man. These patterns are everything, even yourself. If you are having issues in the market, I guarantee you, if you look at the patterns that you're making as an individual, you'll notice what's going on, and you'll also figure out how you can rectify it. Oh man, how far back did we go? Hold on, let me tighten this up. All right, cool. So this is the next level, and I picked this level because it's a bear flag. Now, that bear flag on the daily time frame, if you scroll down to a lower time frame, you have a lot of rejections right here. Okay? So we want to trade towards that level. That doesn't mean that price will reject there immediately, but we know where the next structural level is. All right, so we actually got a target. So in this next hour and 47 minutes, if price closes above this bear candle in this manner, what we're going to do is use that area as our entry. Now, this is what I mean by maximizing your gains with minimum risk. Let's say that this is our entry. This is our target. And where's your stop? Right here. So that's almost a 1-to-8 trade setup by using basic principles as far as the market. The only thing that will stop you as far as executing properly is your ability or inability to control your emotions. So we want to check back on this thing in what time? In the next hour and 46 minutes. Man, oil looks like it is going to keep moving. Nice. What did US 30 decide to do? Okay, we got 16 minutes left. So at 11:30, we'll figure out what's going on with US 30. The fact that price is remaining to trade in this level is a good sign so far. So let's just see if everything turns out in our favor. And that leads me to another tip. Don't trade based on feeling or what you think is going to happen. Don't do hunches. Hunches make babies. You want to make money? Focus on what you see. Let the market tell you the story. And after the story is read, you'll know exactly how to respond. Don't guess. Blue doom boom. We need to see some consolidation on the indices before everything falls. Because this week there will be a retracement. But we need to wait on everything to set up so we can take this trade. Okay, little brother. Nice. So yeah, Serenity, you are going to make a lot of money on this gold sale. Okay. So with this rejection, we need to see what's going to happen right here at these lows. As of right now, gold definitely looks like, at the very least, it will continue to this level. We already hit TP1 on gold. It pulled back towards our entry, and we have two other positions. Excuse me. I actually added to that position once it pulled back to retest our entry.
Six.
Yeah. So let's set an alert here. I want to know when it breaks these lows. Our team on YouTube, what do you guys trade? Are you trading at all? Or are you just interested in starting? Yeah, we got somebody in over here in the chat box. You can see the views. TP Sniper, what up, God? So you guys let me know if you're trading already. Let me know if you are not. You want to start? Let me know what's holding you back. I'm curious. Let's communicate. Communicate.
I say communicate.
Oh, wow. That's no fun. We put in a sale limit order for pound CAD, and it went a few pips above our stop loss. I was wondering where the trade went. Like, when we in the pound trade? Okay, so 6 pips. 6 pips. Let's see, it's filling the gap. Let's see if we can find a way to get back into this thing. Because we did get a nice rejection here. So if this thing is legit, let's see what happens once it retests this area here. If this sell is solid, this thing will continue to fall. Wow. I am definitely taking this trade setup because underneath pound CAD, we got potential for a big fall. Okay. Now, it could also pull back towards this level. So just, keeping that in mind. And we're up so much on these other trade setups that we aren't losing even if we take 2 lessons on pound CAD. So this trade setup is more than worth it as far as testing out again, especially with a 1-to-31 risk reward ratio. That means if you put up $10 on this trade setup, you bring in $310 as far as your return. Come on now. Well, that's 31.7, so $317. Put up $100, it's $3,170. Now, let's see. I'm going to set an alert right here and one underneath. What time frame is that? On the 2-hour time frame, if this thing continues to fall, and it breaks this low here, it's done. It is done. So again, this is the part where I was telling you guys, this is where patient comes into play. Because taking a setup that's 1-to-31, that is enticing. And when you see something like this after doing the analytics and you are comfortable with your skill set, most people want to jump right off the cliff and learn that you can fly before you hit the bottom. But what we're going to do is we are going to wait and let this thing come to us, okay? No rushing. Going to use our alerts to indicate us once it reaches either this level or if it breaks. And when you do that, you're always in a position to trade to or from a major structural level in the market, okay? Let's always keep that idea or that concept of minimizing your risk. TP Sniper, what are you trading this week, man? Did you chart something last night? Because I didn't. TP Sniper, yes, ma'am. He is on Facebook. So we on Facebook, Instagram, and YouTube at the same time. Okay, oil. We need to see how this thing closes on the next 2 hours because this could definitely be a tweezer top right here. And that means this area that we were looking at as far as another entry, where is it? The time frame. Okay, 15-minute. Zeke, how many trades do you have open on U.S. oil? Two? Okay. Close one of those positions right now. Let me do the same thing. So you were in camp when we traded oil, Serenity, so you actually don't have that trade. No, boo. Don't say boo. It's okay. The way you let those goal setups run, you are good to go. TP Sniper, check out my story on Facebook or Instagram, either one of them. I want you to see how much Serenity made on her account and Zeke as well. We got little baby master traders over here. So these rejections created something that we refer to as liquidity. When you see these rejections in the market, the average retail trader is placing their stop losses underneath those levels. We need a real DJ so we can get rid of these ads. You still have one running though, right? Okay, cool. Let's leave that thing open. Okay. So back to this stop hunting concept. That's what I was going over. Tori! What's up, y'all? Tori! Tori is a beautiful soul. She brought my first child in the world. My oldest son, Christian, turned out to be an amazing guy. Yeah, Christian, my son, woman. That's my oldest boy. No, Christian is my oldest boy. All right, so let's see what happens here. Yeah, so back to that stop hunter concept. I got distracted by Tori. Tori, don't distract me no more, woman. All right, so when retail traders see consolidation forming in the market, okay, they start to place their protective layers there, their stop losses. Now, I tell people this and it makes them upset, but it's the truth. The market is man-made. Anything that is man-made can be manipulated by man. All right. And I figured this thing out from experience and back testing it over and over again. The market will drop, capture those stop losses, retest a certain level of structure, and then continue in that direction. Okay. So this thing is based heavily on emotions, fear and greed. They actually create indexes for fear and greed. Now, when most people see an asset moving up, that's when the excitement or that greed comes in and they want to jump in that trade so they can be a part of it. And once the market gets that, it wipes everybody out, takes all of their money, and then moves in the opposite direction. So in noticing that, I do not trade in the middle of price. Okay, and what I mean by that is, after you spot, oh, you remember that, Tori? That is just beautiful. You didn't find anything? Okay. Big V was, I'm sorry, not Big V. TP Sniper was trading, but he didn't find those setups. It's all cool. We're going to let them run. So when you see an area like this is a structural level of support now. Now we look above it. You see, we had to go all the way back here, and this is the next structural level. Everything in between, it could go either way. Like I've seen trade setups like this. You get in, you may get a couple pips, and then the next candle gives you some crazy wick to blast you out of your position and do exactly what I told you guys, and then it leaves without you. So to avoid that, if you are not at a major level, whether it's the highs or whether it's the lows, practice patience, man. It is nothing wrong with not trading for that day. Just because the market is moving doesn't mean that you have to be a part of it. You don't have to be in the market every day. And once you understand that, you will definitely add not only more money with your wins, but you will be more consistent with those wins. So, come on, let's go back to US 30. Uh-oh. Got 3 minutes left. We want to see US 30 break beneath these lows. 3 minutes left. If it does not, I am moving my stop loss above this area here, and I'll just take what we got already on US 30. No need to fight for extra. But the way it's setting up, look like we might be in there. TP Sniper, are you still holding that US 30 sale? Because if not, you know how it goes. You took this, you took the course. If this thing closes, we're adding another entry. We're actually waiting on pound USD to hit this level here. Got a sell limit sitting up there waiting. This entire move definitely looks like it could be a potential bear flag. Yes, ma'am, a bear flag. No, it doesn't look like a bear. Bear just means price is going down. Okay, so when price is going down, you'll normally see price move like this, and then it'll drop beneath it. So this would be that bear flag. Okay, they'll happen either moving upward, or sometimes you'll see them just trade sideways like this, consolidating and then drop. Either way, it's a bear flag. They have different names, but it's pretty much the same function. You don't have to get caught up in the name game. Just get caught up in application. If you see that break, we should be looking for sales. And since we got a few people hanging in with us, I'll give you another gem. And it's something that we call the jump. It's also referred to as the bell curve, but it's a really simple concept that'll help you identify different stages in the market, and it'll also help you get a better understanding of when to execute those trade setups. Oh gosh. Hold on a second. The chart trying to arm wrestle me. Do what I say, damn it. All right, so here, let's say this, we got a runner. You know what? I'm going to do something I haven't done before. I'm going to pull up our course, and I'm going to let you guys see that lesson. So this is actually our platform with our course. We have everything broken down to where it's simple and easy to digest. Now, the way I was taught, I was trained with 2 8-hour sessions from a professional trader. He gave me 40 years of experience in 16 hours. I didn't understand none of that shit. Just being honest, it was information overload. And it took forever to understand how to properly apply it. So that changed my approach to educating people on trading. I give you bits and pieces of material that you can study for the entire day. So you focus more on understanding the concept. And then over 6 weeks, we learn how to put it all together. So let me go in here and find this lesson, the jump. Where should that be? Secrets of structure. Consolidation. Hold on a second, you guys. Let me find it. Be patient with me. But once you see it, it's going to make a lot of sense. Where is week 1? It's not in week 1. Maybe in week 3. range. So not in week 1, not in week 2.
I can't see on the pad.
So let's try week 4. Candlestick patterns. You think it's week 5, Tori? I think week 5 is where we got the. I don't know. Let's see. You might be right. Let me trust you. Let me trust Tori. Tori know what she's talking about. Come on, week 5. Oh, Tori! Let's go, Tori! So week 5, the first lesson. Let me stop this music, you guys. I'm gonna let you guys tune in. Nah, you got it, Tori. No, maybe. I want you guys to watch this, okay? A free lesson for the day. No, every lesson is not free.
Hello, traders, and welcome to our next series, The Jump. We'll take a look at the 3 different phases of market movement for visualization and to make price movement and market structure relatable. We'll use an athlete participating in the long jump as a reference point.
Chris, what up, God?
Just like an athlete participating in the long jump, there are different stages in the run. The sprint is consolidation. Upon the jump, you have the uptrend, another period of consolidation at the height, then a downtrend, and when the runner reaches the ground, movement consolidates again. This will be our focus, and will show how it relates to market structure and price movement in the market.
He said, turn it up. My apologies. All right, so let's go to the actual lesson. That was the intro. Free lesson for the day.
Welcome to the next video in our series, The Jump, where we'll use a visualization of a long jump as a reference point to relate to market structure. Stage 1 will be the area that we recently learned to identify as range or consolidation. Once price breaks out of range or consolidation, we move into stage 2, which is our uptrend. Within stage 2, this is where you will find all of your bullish continuation flags. After consolidation is broken, price moves into steady uptrend, creating all of the flag patterns that you've recently learned to identify. Once price reaches its heights, you'll see another period of consolidation or range. This is where we'll take profit. After this stage, price begins the downtrend when structure is broken and goes into stage 4. Now, price proceeds to move in the downtrend, creating all of the bearish flag patterns that we've recently learned to identify. After the retest of structure, we go back to stage 1. The sprint or consolidation will be stage 1. When price goes into an uptrend, this will be stage 2. Stage 3 is when we reach the height of our jump and price begins to consolidate again. And stage 4 is when price declines to head to the downside to retest structure or consolidation, moving back into stage 1. Now, let's head over to our charts to see how this applies. After price consolidates to create a channel, stage 1 is formed. Once price breaks resistance and begins to go in the uptrend, we enter into stage 2. In our stage 2 is where we'll find our bullish flag patterns. Once we reach the highs and price starts to consolidate again, we enter into stage 3. After price breaks structure, the downtrend begins, and you'll find all of your bearish flag patterns within stage 4. Before price starts to consolidate again to retest stage 1. Just like our athlete, the sprint is stage 1. The jump is our uptrend, which is stage 2. The height is stage 3. On the downtrend, you have stage 4 until price begins to consolidate again. You can find the jump in macro and micro setups. If we scale out to a higher time frame, the same rules apply. We have our period of range or consolidation, which is stage 1. The uptrend, which is identified as stage 2. When price reaches its heights and begins to consolidate, we have stage 3. And in the downtrend, we have stage 4 until consolidation is retested and goes into range again, creating stage 1, showing our sprint, the uptrend, consolidation, the downtrend, and consolidation. The jump can happen as an inverse as well. At this structural level here, with this being the weekly time frame, there's consolidation, Price drops to consolidate again, then comes back up to retest. Now, we can use the jump with our newfound understanding of market structure by understanding which stage of the jump you're in before entering the trade. If you're in stage one, you should only trade within range until you get a breakout, signaling that you're in stage two, where we should only look for buys and continuation patterns. Take profits in stage three, then look for sales in stage four. We can also add to our positions by re-entering on the continuation patterns before taking profits in stage one. Now head over to your charts to identify the jump and its different stages, and I'll see you for our next video.
I never thought about doing that before, but I think I like that. We might have to give some free lessons every now and then and let you actually see it from more of a presentation standpoint versus just the charts. Because a lot of people see the chart and they get intimidated, but it is really simple. All right. So I think that's our time on US 30. Let's see how that thing turned out. See if it want to give us the money. Oh, it looks like it still could possibly drop. So we're still going to move US 30 above the highs and let it run. But it looks like it's going to keep going. So before we get off, I got about 5 more minutes. Christian, Tori. So Facebook, IG, YouTube. Let's see if we got any questions. Any questions that you guys got, hit me. And I will do my best to make sure you get the proper understanding. So let's see, any questions about, any current trade setups or trading in general? Is there anything that you would like to get clarification on? Okay, cool. What broker do we use? The broker that we use is Osprey FX. And if you head over to our free course, go to our website, profitakerseu.com. We have a free course that show you how to set up your account, your demo account, your live account. And when using them, in this course, we actually give you the broker you start with and break down everything for you for absolutely free. That way, not only can you sign up with the proper broker to make sure that we have the same coordinates as far as our stop losses and our targets, but you'll also be able to have a real trading plan. Yes, let's protect that US 30 trade. All right, you say, I don't have questions. You'll write some down. Okay, that's fine. That's fine. You can write them down and send them to me later. Say, can stop losses be put at the highs of consolidation? So, we got a question from Facebook. TP Sniper says, can stop losses be put at the highs of consolidation when entering a trade if structure is broken? So I'm going to draw a scenario, and I need you to let me know if this is what you mean, okay? Fuck you mean? Okay, I'm a big kid at heart, all right? So let's say you're in a downtrend and structure was broken. Is this what you're referring to? Just hit me with a yes or no. Oh, right. How can you see if the live Q&A chart is still up? All right, user error. All right, so I drew the example for you right here. So is this what you mean right here? Price consolidating, then you get a breakout? Yes. Okay, cool. So as far as the stop loss, when you get that breakout, we don't necessarily want to put it above the highs here. And I'll show you why. Let's say, for instance, for this example, this area right here, this is the next structural level. So if you place your stop loss above the highs with this being your entry, look at what happens to your risk reward. That is a 1 to 2 trade setup. Now, what I would recommend is placing the stop loss right above that level that was broken. Okay, so this is where you have the break. This is where we'll place the stop. Now that same trade goes from 1 to 2 to 1 to 12. And the same approach, whether it's a sell or a buy. So let's go ahead and get rid of this, and let's do the scenario in the opposite direction. All right. So we get this break. And let's say this area right here, this is the next structural level. Now, this is our entry. Uh-oh. Let me try that again. If you place that stop loss below, let's look at that. Look at that risk reward. That's not worth trading to me, as we do a minimum of 1 to 3 as far as our trade setups. So here, if we put it right underneath this level, that gives us a 1 to 7, okay? So this not only, like I said, gives you better control of your odds, but it puts you in a position to win more, all right? So a 1 to 2, you would have to win 60% of your trade setups to be profitable. And when you're just starting as a trader, that's difficult. That's difficult. We have had weeks or months where we win 70% of our trades, but I've been trading for 5 years. So for someone to just start to expect that type of turnout, it's not realistic. But when you shift those odds in your favor, let me pull up this other presentation for you. I'm not going to go through the whole thing. I just want to show you a couple slides in it. When you shift those odds in your favor, we went over this. All right. It's pretty much something we refer to as the power of 3. When you shift those odds in your favor, making sure that you only risk 3% and making sure that at a bare minimum, your trade setups are 1 to 3. That's the power of 3. Okay. So like I said, we're risking 3 for a 9% gain. So if you take 3 trades, risking 3% on every trade, with that 1 to 3, you can be in a position to where you only win 40% of your trade setups. So let's say that's 6 losses at 3%. That's only an 18% setback. Those other 4 trades, we brought in 9%. That's a 36% gain. In basic math, at the end of the period, after taking those 10 trades, you're up 18%. So that's why that is so powerful. You don't have to be perfect, but you can still be efficient and profitable, because the goal is to make money. Now, this goes back to those truths that I gave you earlier. What stops you from accomplishing this? Nothing but your mindset. Dang it, you guys, this whole time I'm showing these slides, another user error. Let me go back. All right. So real quick, 10 trades, 3%. 1 to 3 for each trade. Those 6 lessons, that's what you lose. This is what you gain. 46%. Okay. This is what's left, the 18%. And this is where we were. Being in that position where you can still be profitable, even though you weren't perfect on those trade setups. All right. Now, back over here, structure breaking. There definitely is a free trial available for it. I suggest you guys check it out. This is the thing that put everything together for me. But I appreciate the question, you guys. We had a nice session. We're profitable. We won 5 out of 6 trade setups. Big wins for the team. Win. Yeah. So now we'll go ahead and close everything out, you guys. So thank you for hopping on with us. I appreciate you guys. Remember that you're only one trade away from living Why Fight to stay the same. As far as the tools, you've seen one of them with our free example for the day out of our series. So if you guys want to participate with us, send me a message. We'll show you where to start, how to begin. If money is an issue, like I said, we do these things for free as well. So definitely take that free course. Get that account set up. Get in position. And when you see me go live, make sure you set that notification bell so you can be notified immediately. Hop on with me and learn application. Get results in advance and learn how to swing these trades. All right. And definitely back to that mindset series, Big Jewel, our 6-week journal. This helped me be more intentional with my words. I used to lose a trade and cuss myself out. You so stupid. You saw that. You knew what you was doing. And in doing that, I created anxiety for myself when it came to executing on my next trade setup. So I had to learn how to be kind with my tongue, with my thoughts, and treat myself the way I wanted other people to treat me verbally. And then everything else started to align. So again, you guys, don't forget, we also have our merch available. So you guys support the vision, support the dream. And remember, like I said, you're one trade away from living Why Fight to stay the same. And we just talked about speaking. So use this as your affirmation. You speak this into existence. Little babies, let's go.